Warren Buffett's final plan before his passing. Microsoft CEO Bill Gates, Apple CEO Tim Cook, and former U.S. First Lady Hillary Clinton, who nearly became president, along with countless other famous, talented, and wealthy individuals, all sat beneath the stage like students quietly taking notes. Why? Because this was our last chance to learn directly from the legendary investor, Buffett. This was his final appearance at the shareholders meeting, and this time, Buffett held no secrets. He directly told us when he would buy stocks, when he would strategize, what to invest in, and which assets would collapse. Everything, if you can understand it, will reveal that this is the greatest financial arrangement in human history. This chess game has been planned since 2003. You will see that what the U.S. is currently doing is almost identical to what Buffett discussed and calculated in 2003. In other words, since 2003, Buffett has clearly outlined how the American capitalists would set up this game. It is only now, at his last shareholders meeting, that he is executing the largest net closing and acquisition in history. What does this mean? Think Billion X channel welcomes you all. If you have watched my previous videos, you would know that since last year, Bill Gates, Zuckerberg, and billionaires like Jensen Huang have all sold off their company's shares, perfectly dodging this global market crash. Yet, the biggest beneficiary of this crisis remains Buffett. This is because he not only holds the highest cash reserves in history, but also positioned himself early in surging Japanese yen assets. But the question arises, hasn't the U.S. stock market started recovering recently? Logically, if Buffett could sell off before the market collapsed and held a massive amount of cash, shouldn't he have seized the opportunity last month, before the market plunged, to buy in? However, as of December last year, Buffett's cash reserves remained around $330 billion. If he had bought in when the market collapsed, that money would have been enough to acquire both Goldman Sachs and Morgan Stanley. But you will see that his cash reserves not only didn't decrease, but continued to increase this year, reaching approximately $350 billion. This means Buffett did not buy in when the market plunged, but chose to maintain a waiting stance. Why is that? Many people now believe the stock market has fully recovered. So hasn't Buffett missed the opportunity to buy at the bottom? He sold off all his shares and didn't buy them back. So, isn't that a loss? Why does he hold more cash after the crisis? He clearly answered this at this shareholders meeting. He admitted that not long ago, he almost spent $10 billion. He said if it were a valuable and reasonable investment opportunity, he would easily spend that amount. But ultimately, he couldn't bring himself to spend it. He also mentioned that since acquiring Berkshire Hathaway, the company's stock has sharply dropped over 50% 3 times in a short period. He feels that compared to history, the recent market crisis of a few dozen days is nothing. So what does that mean? It means he has $350 billion in hand, but even spending $10 billion seems difficult, unreasonable, and he still can't bring himself to do it. And his subsequent words astonished even me. When asked how to deal with the risk of a declining dollar exchange rate, he frankly stated that they would not invest in a currency headed for hell. Even more frightening, he said he would spend all of this cash within 5 years, keeping only $50 billion. This means he is continuously accumulating dollars now, but will spend it all in the next 5 years. At the same time, he believes the dollar will collapse. So, isn't that contradictory? He thinks the dollar will collapse, yet he holds a huge pile of cash in dollars. Recently, he hasn't even dared to go through with a $10 billion transaction. The U.S. market has recovered, yet he says he must spend it all within the next 5 years. If you find this contradictory, it's because you've made an assumption. The crisis has ended. The worst is over. That's why you see his actions as contradictory. But if the recovery is merely superficial, if the real massacre has only just begun, then everything becomes perfectly logical. My point is, if you don't want to become a pawn in this game, and even want to take a step further to rise to a higher class, then you can subscribe to my channel. Because in the future, I will continue to provide you with more information. And if you're afraid of forgetting what you hear and wasting your time, you can hit the like button on this video. That way, the video will automatically save to your playlist, allowing you to return and watch it anytime. First of all, I don't understand why most people, when listening to the highlights of this shareholders meeting with Buffett, only pay attention to his criticism of the U.S. government. They say Buffett didn't say a word about the U.S. government, but every word he said was about the U.S. government. For example, he explicitly stated that trade wars and tariffs are acts of war, which he considers a grave mistake. When 7.5 billion people worldwide have no goodwill towards you, and only 300 million Americans are happy about it, he doesn't believe that's right. In other words, he believes tariffs and trade wars are not beneficial to the U.S. But is that really true? In 2003, Buffett wrote an article. I will summarize the main points. There are two islands in the world. One is Thrifty Island, and the other is Prodigal Island. Initially, the people on both islands worked 8 hours a day and were self-sufficient. But one day, the people on Thrifty Island decided to work an additional 8 hours a day and use the products from those extra 8 hours to trade with Prodigal Island. The condition was that Prodigal Island only needed to write an IOU. Simply put, the people on Thrifty Island did the work for Prodigal Island, while the people on Prodigal Island just needed to write an IOU. This continued until one day, Thrifty Island brought all the IOUs from Prodigal Island, exchanged them for their money, and then used that money to buy all the land on Prodigal Island. At that point, the people on Prodigal Island lost all their land and had to pay rent to the people on Thrifty Island. Not only that, they also had to return to working 8 hours a day to pay off their debts and interest on previous loans. From then on, Prodigal Island became a colony of Thrifty Island. In 2003, Buffett used the image of Prodigal Island to metaphorically represent the United States. He said that Americans no longer did difficult work like manufacturing, but outsourced it to the rest of the world, which is Thrifty Island. Meanwhile, they borrowed money by issuing bonds to pay the rest of the world. The result is that one day, the whole world will be like Thrifty Island, bringing U.S. bonds and U.S. IOUs to exchange for U.S. dollars, and then using those dollars to buy all the land and resources of the U.S. At that point, Americans will have to return to doing difficult jobs to pay off debts and also pay rent to the whole world, being controlled by the whole world. Simply put, the previous generations of Americans borrowed money, and future generations will have to bear the burden of debt. Therefore, Buffett then conceived a solution, issuing import licenses to all U.S. exporters. Very simply, for example, today I am a U.S. exporter specializing in manufacturing cars and selling them globally, earning $10 billion annually. At this point, the U.S. government would issue me an import license worth $10 billion. I could then sell this license to U.S. importers who specialize in importing goods from around the world into the U.S. After U.S. importers purchase this import license, they can then use that license to import $10 billion worth of goods from abroad. Because U.S. importers have to pay money to buy this license, that money will ultimately be transferred to foreign exporters. That is, they have to pay an indirect cost when selling goods to the U.S. Simply put, if you want to sell goods to the U.S. today, you have to pay to buy an import license from U.S. importers. Without this license, you cannot sell goods to the U.S., and the money paid for the license will ultimately be transferred to U.S. exporters. They make a profit and have to pay taxes to the U.S. government. If you still don't understand, that's okay. Because in essence, this is exactly like the current U.S. tariff mechanism. The current U.S. government states that they impose tariffs on the entire world because they believe the world is making money from the U.S., causing Americans to continuously borrow to pay the rest of the world. If this continues, sooner or later, other countries will become wealthy and buy up the entire U.S. Therefore, the U.S. must impose tariffs. If you want to sell goods to the U.S. and make money from Americans, you must share a portion of that money in the form of tariffs. However, the U.S. government calls it a tariff, while Buffett calls it an import license. And if implemented according to Buffett's method, that import license would be equivalent to imposing a 100% tax on the entire world, because he wants to ensure that the U.S. only imports as much as it exports. Therefore, many people believe that Buffett was criticizing the U.S. government at the shareholders' meeting for imposing tariffs. But in reality, as early as 2003, he himself proposed a similar plan. Furthermore, he even wanted to be more aggressive than the current U.S. government. He wanted to impose a 100% tariff on the entire world. What is called a tariff was actually something he proposed back in 2003. Now, the U.S. is just doing exactly what he once said. However, he himself criticized tariffs as an act of war. Isn't this contradictory? Actually, it's not contradictory because a tariff is a type of tax, while an import license is like an admission ticket. The names are different, and the nature is indeed different. For example, when you go to a concert, you buy a ticket, and everyone considers it normal. But if you had to pay a tax to go to a concert, no one will want to go anymore. So, Buffett is not against taxation. He just disagrees with the term tariff. Since 2003, he has already devised a story and a reason for the U.S. to impose tariffs. That is the story of Thrifty Island making all the money from Prodigal Island and then buying it out and turning Prodigal Island into a colony. And if you believe that story, believe in Thrifty Island and Prodigal Island, then your country will be bought out by the U.S. What does that mean? The main point is coming. What is the truth in reality? Can the whole world currently take U.S. bonds and exchange them for all the land and assets of the U.S.? If that were truly the case, wouldn't the whole world have already bought up the U.S.? Wouldn't the U.S. have already become a colony of the whole world? But you will discover that the truth seems to be the opposite. The U.S. owes money, but it doesn't really need to pay anything. It just needs to print money to pay. Not only that, it can also print money to buy up assets worldwide. Why? You can find the details in my video from last week. Here, I'll just say simply, it's true that the whole world has earned a lot of money from the U.S., but what the U.S. owes is U.S. dollars. When it's time to pay, they just need to print dollars and the payment is done. And every time a financial crisis occurs, U.S. capitalists take those newly printed dollars and buy up cheap assets everywhere in the world. For example, in South Korea, the banks, the largest shareholders of Samsung, LG, many of them are not Koreans but Americans. In other words, Prodigal Island was not bought out by Thrifty Island. On the contrary, Prodigal Island went on to colonize Thrifty Island. If you believe in the story of Thrifty Island and then work hard, only hoping that one day you will earn U.S. money and then buy back the U.S., the final outcome is that you will be bought out by the U.S. This is a big chess game set up by the capitalists. So when everyone works with their heads down, they should also look up at the sky a little. If you think that as long as you don't invest, don't start a business, don't spend money, just work hard to earn money, no one will be able to take your money. Then when capitalists just print money, inflation will immediately rob you of all the value of the money in your hands. At that time, you won't be able to buy a house, you'll earn money forever, but the money will constantly lose value. You'll have to rent a house for life. You'll only be able to exist, not truly live. It's not that if you don't stir up trouble, trouble won't find you. You only have two choices. One is to become an exploited Thrifty Islander. The other is to become a Prodigal Islander who exploits others. As for us, small retail investors, what advantages do we have compared to big players like Buffett? It's flexibility. Buffett may have to plan a year in advance to buy or sell assets. But we just need to wait for confirmed capital flows to pour in and are about to push prices up. Then it's not too late to jump into the market. This means the trend is created by the big players, and we just need to follow the trend, make money, and withdraw immediately. So why did Buffett propose this import license policy, which is essentially a tariff, in 2003? Because in that year, Buffett realized that the old U.S. method, which is to lower interest rates and print money to harvest the world, would sooner or later lose its effectiveness. When it loses effectiveness, a new method, which is tariffs, must be used to continue harvesting the world. What does that mean? In the past, whenever the U.S. economy went into recession, just lowering interest rates by about 5% was generally enough to save it. When interest rates fall, the cost of borrowing money for business and investment also decreases. When costs decrease, profits increase, right? For example, in the 1981 recession, the Fed cut interest rates from 18% to 13%. In the 1991 recession, they cut from 9% to 4%. In the 2000 recession, they cut from 6% to 1%. You will see interest rates decreasing more and more. Until the 2008 financial crisis, the Fed directly cut interest rates from 5% to 0%, yet the U.S. economy still could not recover. It's like a patient who needs medication every time they get sick, but after each dose, their body becomes more resistant to the medicine. Previously, 2 pills were enough, but later it required 5 pills, then 10 pills, and eventually the medicine no longer had any effect. Similarly, in 2008, lowering interest rates to 0 was also useless. Each year, the only way was to inject medicine, meaning quantitative easing, printing money, and providing money at near-zero interest rates to capitalists for business and investment. In 2008, over $3 trillion was printed. By 2020, when the pandemic hit, over $5 trillion more had to be printed. U.S. public debt is growing larger and larger, and now no one wants to buy U.S. bonds anymore. Even if the Fed keeps interest rates high, even if the U.S. pays high interest rates to lenders, U.S. bonds still cannot be sold. If no one lends money to the U.S. anymore, and the U.S. can only print money to spend each time, the dollar will become worthless paper. It will go to hell. So by 2025, lowering interest rates, drinking medicine no longer works, and printing money, injecting medicine also doesn't work, then the method Buffett proposed in 2003, which is tariffs, must be used. Tariffs are like a defibrillator to make the U.S. economy's heart beat again. To put it simply, in the past, the U.S. was responsible for printing money, while the rest of the world did the hard, dirty work. To make the whole world accumulate wealth and work for Americans. To make the whole world believe the story that if you just try a little harder on Thrifty Island, one day you will be able to buy back the U.S. Therefore, U.S. money must continuously be spent abroad. The meaning here is that the U.S. must continuously spend money on the whole world, and then through selling U.S. government bonds, collect dollars back from the entire world. Simply put, the U.S. prints money to buy your goods, you earn U.S. dollars, and then you lend those dollars back to the U.S. This way, the U.S. has an endless flow of money to buy your goods, and each time, it only needs to pay you a little interest. Therefore, initially the U.S. just needed to lower interest rates to solve the debt repayment problem. But later, as the people on Thrifty Island gradually discovered that Americans were just using a trick, catching the tiger empty-handed, doing nothing yet still consuming all the goods they painstakingly produced, people began to reduce their purchase of U.S. bonds, meaning they reduced lending money to the U.S. At that point, The money the U.S. had spent could not be recovered, and if they couldn't borrow money anymore, the tactic of lowering interest rates was no longer effective. Therefore, the U.S. had no choice but to expand its balance sheet, continuing to print money to spend. As of 2025, people worldwide are buying fewer and fewer U.S. bonds. Lowering interest rates or printing money no longer attracts global capital. Therefore, a new method must be used, which is tariffs, to rob money from the hands of the whole world, and even force the whole world to move their factories back to the U.S. Simply put, in the past, the U.S. transfused blood to the world, but now it is sucking the blood of the whole world, forcing the world to serve the U.S. In other words, Prodigal Island no longer needs Thrifty Island to work for hire, but directly moves all the labor from Thrifty Island to Prodigal Island. Therefore, the center of power shifts. When tariffs are added to the U.S. dollar falling into hell, what exactly is the U.S. playing at? Everyone should know that tariffs have caused the U.S. dollar exchange rate to fall sharply. A few years ago, when U.S. bonds were still appreciating, many people bought them, meaning they lent money to the U.S. This year, 2025, a large amount of U.S. bonds will mature, meaning the U.S. must repay its debt. Those who lent money to the U.S., if they do not continue to reinvest in U.S. bonds, will have to convert dollars into their national currency, right? And if at that time the dollar is in free fall, seriously depreciating as it is now, what will happen? For example, in 2020, interest rates were very low and you bought U.S. bonds, only receiving a yield of 1 to 2%. Now the bonds mature and you receive that interest. But when you want to convert dollars to Japanese yen, euro, or new Taiwan dollar, you find that your currency has appreciated by 10%. This means the dollar has depreciated by 10%. The result is that you earned 1 to 2% in interest but lost 10% due to the exchange rate. So you only have two choices. One is not to continue lending to the U.S., accept the loss, and withdraw. The other is to continue buying U.S. bonds. Because currently U.S. bonds have an interest rate of up to 4%, and the Federal Reserve is likely to continue printing money, this 4% interest rate is considered very high. If you buy in and lock this interest rate for 10 or 20 years, waiting until the dollar recovers and appreciates again, you will no longer lose money. But the reality is you have no other choice. You can only continue to buy U.S. bonds and long-term bonds at that. So, one of the effects of tariffs is to force capital flows to be locked within the U.S. and unable to escape. This way, U.S. bonds will continue to be bought and the crisis in bond demand will be resolved. But once people accept a loss rather than continue buying U.S. bonds, what I said in a previous video will happen. The U.S. will reborn from the ashes, meaning a financial crisis will erupt to harvest the entire world and then continue to print money to restart its economy. If you don't understand this principle yet, you can re-watch my previous video. Currently, we see that Buffett has not yet bought at the bottom, and not only has he not bought any stocks this year, but he has continued to sell off bank and financial stocks. Selling off means not holding on to any shares. In other words, Buffett is still acting to bet on the biggest financial crisis in history. Why? First, if what Buffett says is true that the dollar will go to hell, meaning it continues to drop 10%, 20%, or even 30%, what does that mean? It means that if a financial crisis actually happens, all the money invested in U.S. assets worldwide will not be able to escape, right? That is, when the financial massacre occurs, no one can escape. If you try to run, you will die a more miserable death, because you will not only lose from falling U.S. stock prices and depreciating U.S. bonds, but also from the dollar's continued depreciation. You will only lose more. The value of U.S. capital assets can then be used to buy back the assets you sold off at a cheaper price. Second, If the dollar continues to depreciate, capital flows will be cut off and unable to pour into the U.S. anymore. In other words, if you see the U.S. stock market collapse and the dollar also depreciating sharply, you will be even less likely to buy U.S. stocks. Because as soon as you invest, you will be trapped. This will be a life or death battle. As long as you're a foreigner and your money is stuck in U.S. assets, you cannot escape. You might think this is very contradictory because Buffett holds $350 billion, of which the cash ratio is only about 25%, meaning he only holds 25% of his assets in U.S. dollar cash, while the remaining 75% is still invested in U.S. assets. If U.S. assets collapse and the dollar also depreciates, how would that benefit him? Friends, most of Buffett's assets are not publicly listed stocks. Even though 75% of his assets are invested in U.S. assets, less than a quarter of that is invested in the stock market, and most are stocks like American Express or Coca-Cola. These companies will not go bankrupt and will continue to increase dividend values. Buffett earns not from stock prices, but from company dividends. The majority of U.S. assets that Buffett holds are through outright acquisitions. These are unlisted companies. So, if the U.S. collapses, do you think that would greatly affect him? Falling stock prices have nothing to do with unlisted companies. As long as the companies he invests in do not go bankrupt during a financial crisis, they will continue to generate profits for him. He earns money from business operations, not from stock prices. Second, even if the dollar goes to hell, it won't become worthless paper. For Buffett, does this have a big impact? It's like you're Japanese, you don't travel, don't buy foreign goods, don't invest abroad, and only spend Japanese yen domestically. So even if the yen's exchange rate falls, it won't affect you. Similarly, Buffett holds over $300 billion, but he cannot convert it to other currencies. This money can only be stuck in the U.S. For example, previously, a transaction of just $8 billion caused a new Taiwan dollar to appreciate by 10%. If Buffett were to convert all of his over $300 billion into other currencies, the dollar would truly become worthless paper. Buffett isn't advising us not to hold U.S. dollars. Rather, he has no other choice but to be forced to hold it. His money can only be stuck in the U.S. You see, even when investing in Japan, he can only borrow money from Japan and use Japanese money to buy Japanese assets. He cannot use his own U.S. dollars. This means that even if a financial crisis occurs, even if the U.S. collapses and the dollar depreciates, it will not greatly affect Buffett because his money can only be invested in U.S. assets. If a financial crisis is a life or death battle, if it can trap all the capital that is poured into U.S. assets for many years, even cut off global capital's access to the U.S., then for Buffett, who can only spend money within the U.S., he will become the biggest winner in this crisis. He even stated directly that when the crisis occurs, there will still be opportunities to buy assets at extremely cheap prices. He said that within the next 5 years, he will reduce his cash holdings from $350 billion to $50 billion. This means that the remaining $50 billion in cash is actually the minimum working capital needed to operate his companies. For example, an insurance company needs to maintain around $20 billion in its accounts to pay out insurance claims. So if he spends all the money in hand and only keeps $50 billion, it means that within the next 5 years, which is before Trump's term ends, there's a high probability that a buying opportunity will emerge that Buffett considers extremely reasonable and cheap. This opportunity is even more attractive than the current Great Crisis. Buffett has made it clear that the recent developments in the U.S. stock market are not a major fluctuation. This is not a real bear market yet. In other words, this collapse is not even an appetizer for Buffett, because he has not yet made his move. On the contrary, he has sold off all bank and financial stocks. Because when the dollar goes to hell, the heaviest losses will fall on banks and financial companies. In 5 years, by 2030, Buffett will have completed buying at the bottom, and what he buys will be U.S. assets because he can only buy U.S. assets. After 2030, U.S. assets may surge again. Similar to Buffett, my primary currency is also the U.S. dollar. The difference is that his capital scale is infinitely larger than mine, so he cannot casually buy assets, but can only buy short-term bonds to avoid risk. As for us, we started investing in gold, Bitcoin, and the Japanese yen last year. Why? I've said it many times. The reason is that I need to find safe haven assets to avoid the risk of dollar depreciation. As long as the safe haven assets I buy increase more than the dollar depreciates, I can at least preserve the assets I earned last year. However, currently, many people, as soon as they see the U.S. stock market recover a bit, immediately convert all their money into dollars to invest. I believe everyone has their own choices, and we should respect each person's choices. As for me, I can say that the risk of investing in a U.S. stock market today comes not only from the U.S. stock market itself, but also from the currency market, specifically the U.S. dollar. Suppose you're Japanese. If you buy Japanese stocks to buy at the bottom and profit from the rebound, at most you will only lose when the Japanese market declines. But if you're Japanese and buy U.S. stocks, when U.S. stocks fall and the dollar also falls, you will lose on both ends. Simply put, if you invest in U.S. stocks today, you might profit from the stocks but lose from the exchange rate. Then your assets will be trapped in U.S. stocks. Because as soon as you convert your money back to Japanese yen, you have already lost. And if the door closes, when this financial massacre truly happens, those who die are those who are recklessly rushing into the market now. For myself, from the end of last year until now, what I want to do is avoid risk, not make a profit. Making a profit is something to do in the easiest markets to make money, not in uncertain rebounds. If I make a profit, it's just a small profit from the rebound. But if I lose, I could be tying myself into a trap. Finally, if you find any details in today's video that you don't fully understand, I recommend rewatching 2 or 3 videos from previous weeks. I'll just say a few words. My videos have tightly linked logic. If you don't watch previous videos, some people might say I only speak after the fact. But in reality, many things have been said beforehand. I cannot explain everything from the beginning every time. That would be very annoying, and the video would be very long. Recently, the situation has become even more chaotic, but due to time constraints, I can only stop here. I share free information on how to become wealthy, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, I still recommend that you follow my channel and turn on notification bells. Then, freely share this video with others. I sincerely wish all of you who have liked this video to achieve financial freedom soon. If you found just 1 or 2 useful sentences in what I said today that help improve your life a little, then I am already satisfied.